Let gold absorb the sovereign capital. Let it. Bitcoiners should not be upset by this. We should be celebrating this. We are entering a neutral reserve era. Fiat currencies are dead. The free market will elect the winner. Lower your time preference. Be confident in what you own. Bitcoin's fine. It's just too young and too small. How the would Bitcoin absorb trillions of dollars of physical spot buy demand? Guys, gold was 10 to 20 times bigger than Bitcoin, and it itself can't even absorb the amount of demand. It looks like a meme coin chart. How the do you think Bitcoin was going to react to that? China would have 10x the price on one order.
The past few sessions in the market have felt disorderly, uncomfortable, and deeply confusing, even for experienced investors. Bitcoin slipped hard, briefly trading near the low $82,000 range, while equities rolled over, commodities dumped, and even traditional safe havens failed to offer shelter. What made Thursday especially unsettling wasn't just the size of the move, but the way everything seemed to break at once. The dollar firmed, oil surged, stocks sold off, and both gold and silver were hit aggressively. When markets sell first and explain themselves later, it's usually a sign that something structural is being repriced. In crypto, the pain felt particularly acute. Bitcoin erased its gains for the year, Ethereum slid back toward the mid-$2,700, and major altcoins like Solana, XRP, and Cardano followed suit. This wasn't a spot-driven collapse, but a violent futures deleveraging event, where leverage unwound faster than liquidity could absorb it. Still, for long-term holders, the frustration is familiar. Bitcoin seems hypersensitive to negative macro shocks, while often lagging during moments of optimism. That emotional whiplash has defined this cycle so far. That sense of exhaustion and disbelief is captured perfectly in a viral tweet from Autism Capital. Gold goes up, Bitcoin goes down, gold goes sideways, Bitcoin goes down, gold goes down, Bitcoin goes down, gold recovers, Bitcoin goes down, an asteroid full of gold is discovered, Bitcoin goes down, there is no rotation, there is only pain. It's in moments like this, when correlations break, emotions run hot, and conviction is tested, that voices like Mallers and Raoul Pal matter most. Not because they promise relief in the short term, but because they help frame what's actually happening beneath the surface. In this video, Jack lays out why gold is absorbing sovereign stress today, why Bitcoin isn't broken, but simply too young, and how a neutral reserve era is beginning to take shape. Before we dive in, if you value clear, no-nonsense macro analysis like this, take a moment to like the video, subscribe to the channel, and turn on notifications. Jack's core message challenges a lot of popular assumptions about Bitcoin, gold, and liquidity, and later, we'll also connect this to an important perspective from Raoul Pal on why this pain may be temporary and what comes next. Thanks, and enjoy the video.
So if you have, listen, there's all of this wealth that's been created because the reality is the global population has grown to supposedly 8 billion people. We have created a lot of stuff. All the value we've created, all the time, the energy, the money. What can absorb that level of sovereign stress and pressure? And the answer, if you look at a chart, has very obviously been gold. It's where it's all gone. So if everyone has to find an exit door and an escape valve and get the hell out, what's big enough to absorb it? Because if you're just to make the point clear, well, can we all run into Pokemon cards? Can China run out of sovereign debt and into Pokemon cards? Well, probably not. There's not enough liquidity. They're not sellable. There's not even enough of them. Pokemon cards can't grow to be a $50 trillion market. They can only be so big. They can only be so liquid. They can only be so sellable. They can only, what's their ability to transcend through time? How do I store them safely? What if someone spills on my Pokemon card? So the question is, what can expand to 30 trillion, 50 trillion, $100 trillion in size? And the answer that sovereigns have come up with is gold. And the obvious question is, why not Bitcoin? I've talked about this on the show. Bitcoin's better than gold. Bitcoin will be the money because I think it just outcompetes every other money, pound for pound, property for property, period. But the problem Bitcoin has today, it just wasn't ready, guys. It's just too small. China's trade surplus alone in 2025 was over $1 trillion. I just read you guys Bitcoin's market cap during the introduction. What was it? 1.7 trillion something? It's not big enough. China, there's not enough room for China to pour $1 trillion in. And by the way, they got to pour way more than that. That's just their trade surplus in one calendar year. What about a lot of their other savings and assets? And that's just one country. Bitcoin is gradually catching a sovereign bid. But the biggest bidders of Bitcoin right now are ETFs and corporations like Strategy or 21. And that doesn't mean that people don't understand what it is and people don't know where it's going. It's how old it is. It's still a teenager. It's a certain size. Michael Saylor can plow $1 billion a week into Bitcoin, and Bitcoin can absorb that no problem. $1.5 to $2 trillion asset, no problem. Plenty saleable, plenty liquid, easy. China, it's just not big enough. So the thing is, gold, the way I would describe gold relieves the pain. It is not the solution for the future. We all know that. How do I know that? It already failed. Did gold get any more decentralized? Did gold get any faster? Did gold get any lighter? Did gold add any new features? Did gold address any of the reasons that it got demonetized and failed humanity as a money? It's not software. We can't make it better. We can't improve it. It's a rock. Gold is simply relieving the pain and the panic today. And I'm excited about this because as a Bitcoiner, I've been in Bitcoin for over 10 years. I've been in Bitcoin for a very long time. Late 2012, early 2013. That's how long I've been in Bitcoin. I dream of these days. They're real now. We're moving away from sovereign debt. The US is done being the world reserve currency, at least in its current status. I'd be shocked if politicians admitted to what I'm saying in plain English. But whatever, the older version of the dollar's dead. That's great. Let gold absorb the sovereign capital. Let it. Bitcoiners should not be upset by this. We should be celebrating this. We are entering a neutral reserve era. Fiat currencies are dead. The free market will elect the winner. Lower your time preference. Be confident in what you own. Bitcoin's fine. It's just too young and too small. How the would Bitcoin absorb trillions of dollars of physical spot buy demand? Guys, gold was 10 to 20 times bigger than Bitcoin, and it itself can't even absorb the amount of demand. It looks like a meme coin chart. How the do you think Bitcoin was going to react to that? China would have 10x the price on one order. So now what? Where does Bitcoin fit in all this? Let me say something quick. Where is Bitcoin going? Bitcoin is going to be the reserve asset for all of us. Bitcoin is going to be the reserve money for all of us. I pray and I hope that I'm alive for hyper-Bitcoinization. I would love nothing more out of my Bitcoin career than for that. Truly, truly. When I sit back and I daydream, I've talked about it. God willing, I would want nothing more than to be a father, than to build family. And I would like nothing more out of my career. Strike 21, this show, whatever comes next. As long as we get to hyper-Bitcoinization, I will die the happiest man that this species has ever seen. Okay, that's where we're going. Bitcoin solves for all monetary use cases.
What Jack is really describing here is a size and timing problem, not a failure of Bitcoin's thesis. When sovereigns are forced to exit debt markets and park trillions of dollars somewhere liquid, durable, and globally accepted, gold is the only asset large enough to absorb that pressure today. Not because it's better, but because it's already massive. Bitcoin, despite its advantages, simply isn't big enough yet to handle sovereign-scale flows without extreme volatility. That's why gold is front-running liquidity while Bitcoin is reacting to it. Gold relieves pain in the present moment. Bitcoin represents a solution for the future, and this distinction between what absorbs stress now and what ultimately replaces the system is critical to understanding where Bitcoin fits in the current market cycle and why Jack believes patience matters more than price in the short term. With that framework in mind, Jack takes the analysis one step further in the next segment.
So where are we today on Bitcoin's ride right now? I'm overgeneralizing slightly, but what I would say is Bitcoin is not competing with sovereign paper. It's not competing with US treasuries. It's not competing in that market right now. It's just not. It's not big enough. We're getting there. We got the ETFs. We're growing. We're getting there. There's a literal strategic reserve from the United States of America. We could pass the Bitcoin Act and be on our way to owning 1 million Bitcoins as a country. We are getting there. You're talking to the guy that helped the first country adopt Bitcoin in El Salvador. Like, trust me, we're getting there. A lot of blood, sweat, and tears. Like, I thought I was going to die at one point. Like, we're working on it, but we're not there. I would say gold is competing with sovereign paper. Gold is competing with treasuries. Gold, for that reason, front runs liquidity. Bitcoin, right now, today, is competing with risk assets. It is. It just is. Bitcoin's competing with equities and growth. Bitcoin doesn't front run liquidity. It responds to actual liquidity. Bitcoin sells off when markets get tight, and Bitcoin rips your face off when they print the money. That's why gold leads. Gold anticipates the liquidity. Bitcoin responds to the liquidity. If you look at Bitcoin priced in gold, so Bitcoin has been outperforming gold ever since I got involved. It's tearing the face off gold. And I know people now are like, oh my God, gold's kicking Bitcoin's butt. This is the chart of Bitcoin price in gold. No, it's not, dude. Just give it time, man. It's not at all. It's really not. Gold's up 80% in a year. And everyone's like, oh my God, 80% for Bitcoin is nothing. Literally nothing. Gold's performance is fine. It's fine. It's good. It's fine. Okay. Now, if you price Bitcoin and gold, the bear markets we experience in gold terms, because fiat really distorts your ability to assess reality. It's like wearing drunk goggles. Like everything's spinning. Like you can't see straight. I don't know which way is up, down, left, right. It's distorting reality, like the denominator in which I'm measuring everything. At the end of the day, guys, money is information. How much value am I creating for the world? And what can I get in relation to the value I'm creating? That's all it is. Like it's information at the end of the day. Who owes what to whom? That's what money is. And if you are using bad money, it's like wearing drunken goggles. Like your information's all up. So let's look at Bitcoin in gold terms, and you realize, these are monthly candles. So, Bitcoin's bear markets are a little over a year, and we're at that point in gold. Now, I'm not saying Bitcoin's about to shoot up. I do think 2026 is going to be a good year because I think they're going to have to print the money. And again, when they actually print the money is when Bitcoin goes. Gold always front runs the money printing. Bitcoin outperforms it when they actually print it. And this case is made like again with this slide. And these charts I got from Twitter, so shout out to their authors, but this slide titled "The Liquidity Cometh." What are we looking at? We're looking at the RSI at the very bottom, those green and red. Okay, that is the US 10-year multiplied by the Chinese 10-year. And what that is saying is this is basically indicating when liquidity is tight from nation states versus when liquidity is abundant, when they're printing a lot of money. And it just crossed up where they're about to start printing a lot of money. What do I mean by that? Quantitative tightening is ending. We know QE either is about to start or has started. It depends what you count the Fed doing today. But we're about to enter a pro-liquidity cycle. We know the Fed's balance sheet went from $9 trillion to $6 trillion. And I think not only is it going to go up again, but it's going to go from around $6 trillion and make new all-time highs and exceed $9 trillion. I think they're going to have to print an ungodly amount of money. We know Trump has not only not reduced the budget, but he wants to grow our defense budget by, he wants to take it from $1 trillion to $1.5 trillion. We know that true interest expense is greater than our receipts. I mean, we have all sorts of problems. But every single time this liquidity marker starts to break up, Bitcoin goes on a tear. Why? Well, because they're actually printing money. They're not talking about printing money. They're not forecasting printing money. They're actually expanding the balance sheets. That's just happening. So to me, the combination of Okay, we've been in a gold bear market for a little over a year. Okay, they're about to start printing money. And you pair that with the fact that like globalism, according to the United States, is dead, which means the current version of the US dollar and the world reserve currency is over. It's dead. I mean, I'm just bullish. I don't know what to tell you guys. I'm just bullish.
Jack's core argument is ultimately a sober one. The global fiat system is breaking down, and the world is scrambling for neutral reserve assets that are not tied to political promises or sovereign debt. Gold, by sheer size and historical inertia, is absorbing that stress today. It competes directly with treasuries and sovereign paper, and in doing so, it front-runs liquidity cycles. Bitcoin, on the other hand, is still competing with risk assets, equities, growth, and speculative capital, because it remains too small to play the same role yet. But that distinction is not a condemnation of Bitcoin, it's a timeline. Bitcoin responds when liquidity actually enters the system, not when policymakers merely talk about it. When balance sheets expand, when quantitative easing resumes in force, and when money is truly printed, Bitcoin has historically outperformed everything else. Jack's point is that fiat pricing distorts reality. Measuring Bitcoin through a broken denominator is like wearing drunk goggles. You lose perspective. When Bitcoin is priced in gold terms, its long-term outperformance remains intact, and its drawdowns appear as temporary pauses rather than structural failures. This is where Raoul Pal's perspective adds crucial context. Responding to the growing frustration across crypto markets, Raoul wrote, "Everyone in crypto now says we can't have nice things while Nasdaq, gold, silver, copper, and EM rip higher. As ever, zoom out. This is the divergence versus NDX. It barely registers. 2020 had something similar. Also, the gap in Bitcoin versus GMI global total liquidity barely registers, but we saw similar in 2015 and 2020. There is nothing abnormal about this current disconnect. Liquidity is rising. All you require is patience, and the market should catch up in time." His follow-up was classic Raoul Pal. "The beating shall continue until morale improves." The message from both Jack and Raoul converges on the same conclusion. Short-term price action feels brutal because Bitcoin is responding to tight liquidity, leverage unwinds, and macro stress. But structurally, the system is moving exactly where Bitcoin was designed to thrive. Globalism is fragmenting, the dollar's reserve status is weakening, and policymakers are once again backing themselves into a corner where money printing becomes inevitable. And while Thursday's crash dominated headlines, the regulatory backdrop is quietly improving. The U.S. Senate Agriculture Committee has advanced a major crypto market structure bill that would give the CFTC primary authority over Bitcoin as a commodity, creating clearer rules for spot markets and consumer protections. SEC Chair Paul Atkins has also stated that now may be the right time to open the $12 trillion 401k retirement market to crypto with proper safeguards. These are not signals of a system rejecting crypto, but one slowly being forced to integrate it. So yes, the volatility hurts. Yes, the correlations are frustrating. And yes, patience is being tested. But the broader direction remains unchanged. Gold is absorbing the present stress. Bitcoin is waiting for the liquidity cycle to turn. And when it does, history suggests the recovery won't be quiet. If you found this breakdown useful, make sure to like the video, subscribe for more deep dive macro and crypto analysis, and share your thoughts in the comments. How are you navigating this volatility, and do you agree with Jack and Raoul's outlook? Thanks for watching, and we'll see you in the next one.